Good evening, all.
Good evening.
Okay, so hi everyone. Shall we start?
Yes, ma'am.
Okay, ma'am.
Okay. So last time I gave you exercises. Do you remember? Like I gave you a few exercises to do, for practicing in how to make entries in journal. Yeah. So anyone is ready with that? No? Okay. So let me take the slide. So yes. So do you remember like I gave at least no, I think 3 exercises. So if anyone has completed the first exercise, you can know like keep it ready. We can know cross check the answers. Yeah. Guys, please respond. Please let me know whether anyone has no like completed at least any one of the exercise. At least the first one. Okay, fine. So like I have shared the answers with you. Rashid, please mute your audio. Hiba and SS, please mute your audio. I mean, the background noise is not like very disturbing. Okay, thank you. So the first one, I have no like worked it out and I'm sharing the answers with you. If you have done, you can now cross check the answers. So let's take a quick look. So you remember how to make an entry on sales return and purchase return. So the exercise wonders the following transaction journal entries should be okay, Mohan started business with cash, that is cash account to capital account 25,000. Bought goods from B, again purchase account to B account since it is a credit purchase because cash is not mentioned here. And then cash deposited in State Bank of India 10,000. So it goes to the bank. So here bank is the receiver. So that's why like I have mentioned as bank to cash account. And then returned goods to be 1,000 rupees. So we have returned a purchase returns. We have done a purchase returns from the company side. So here the receiver is the B account. Okay, so we have returned it to B. So B is a receiver who is a debtor here, and to purchase accounts returns creditor 1,000 rupees. So you have to know like keep the narration, make the narration then and there very simple and very clear why the transaction is being done. And then sold goods to Q, again Q account debtor to sales account because Q is the receiver here, and then goods returned by Q. So since Q has returned the goods to us, so it's considered as a sales return debtor. Though the company has received the no the package, received the products, a part of the product, so it has been like termed as sales return debtor to Q account, which is worth 5,000. And so check this entry. Goods distributed as free samples to our customers. So here the goods distributed as free of cost, as free samples, or like goods gifted to the employees, like in term, if there is an occasion, or a season, like coming, so like being distributed to the employees at free of cost, or goods taken by the employer. I'm sorry, by the owner of the business for personal use. So everything, like it comes under purchase account. Okay, so here the goods distributed at free samples, we are making it as advertisement account debtor because free samples, it comes under advertisement. The company is advertising its product for free of cost. Okay, so it's being distributing to the customers. So the goods worth is 5,000. So advertisement account debtor 5,000 to purchase account creditor 5,000. Since it is seen as expense, okay. And here the narration being free samples distributed to customers. So this is how we have to journalize the transactions. Hope you're clear. Yes. So any doubts on this on these entries? You have any doubts? Okay, fine. So the question is, journalize the following transaction and post to proper ledger accounts. So in your exams, first they may be like giving the entries like this. They will be asking you to first journalize all the transactions, and then from the journal you have to post it to the ledger. Okay, or otherwise sometimes they may give a printed form of the journal, and they may ask you to make it as a ledger post. So in both ways, question paper. Okay, so here first you have to make the journal entry from the transactions given, and then after making the journal entry for each and every transaction, that is for each and every type of account, you have to make the ledger post. So let's see. So journal entry, you know very well, this is how it is done. So capital account, yes. So cash to capital, and goods from Ram. So it's considered as credit purchase, and cash purchase here, like purchase to cash, and cash sales and cash to sales. Sold goods to Guru, so it's on credit, and paid to Ram, again, being cash paid to Ram. Received cash from Guru, again there is a cash transaction. Paid salaries and rent, so this can be made as a compound journal entry. So both as in in both aspect, cash is involved. So compound entry, sales account, salaries account, rent account to cash account. So all done. Clear? Okay. So from this journal, we are going to prepare the ledger posting. Okay. So let's see one by one. So first, make sure you're starting with the first entry which has been posted on the journal. So the first entry here is the cash account. So, and then the capital account. So always start with the first entry. Start with the capital and go with all the cash transactions. So after this entry, you will find RAM account or the sales account. So after capital and cash, it would be the sales account. Then after sales, you have to make the separate ledger posting for purchase account. And then after purchase, cash is already done, sales is already done. Then you have to go with RAM and make separate entry for guru, and then go for salaries and then for rent. So this is how the format should be. Okay, this is for easy understanding and to make sure we are not missing out any entries, because if you do it randomly, if you choose it from here and there randomly, you may miss any entry, and it is not quite right also. So all the ledger posting, it should be in chronological order. So let's see. Okay, this is the first journal entry, ledger entry we have made with the help of the journal listing here, which we have already prepared. Okay, so see the first one. First one is the capital entry. That is the cash invested in the business, so which is considered as capital. So here you can see. Okay, so the heading of the ledger account, the ledger posting would be capital account. So this would be the first one. So to capital account, to balance carried down, it is 20,000. So 20,000 being invested in the business. So after the capital is being invested, nothing has happened between 1st of January to 5th of January. Yeah. So from 1st of January till 5th of January, that is till 4th of January. So the cash, the capital invested in the business, it has remained the same. So nothing has gone out or nothing has come in. Yeah. So we are taking us the balance account debtor 20,000. So it is done by cash. So capital is invested in the means of cash. So we have given here as cash account creditor 20,000. So here we are following the rule of the ledger posting, which is cash which comes into the business. That is all incomes which comes into the business, it's considered as credit, and all which goes out of the business, it's considered as debit. Clear? So let's see the second example. And then you have the capital account, the first, the capital entry, then we are going to the cash entry. So we are making the cash column. All the cash entries would be listed in the cash column. So on January 1st, that is the cash transaction, that is cash capital being invested. And then on 5th, it is a credit sales. On 7th, again, cash is and the cash the company has purchased something, so cash is being involved here. And then 15th, it's a credit sales. 18th, again, there is a cash paid to RAM, and there is a cash involved here. And 25th, again, cash is involved, being cash received from Guru into the business. And 30th of January, again, cash is involved here, like being salaries and rent paid. So we are going to have all the cash transactions in one particular column, which is the cash column. Okay, so let's start. So in the debtor column, what we would have is the capital. It is the first and foremost entry on January 1st. And then we have sales. We have the sales. I'm sorry. The sales of 4,000 rupees. And then you have to Guru. That is for Guru, we have the business has received 1,500. So all the debtors, that is whatever the business has received, the capital through sales, cash has been received, And from Guru, cash has been received. So everything we know like listed here. And then whatever has gone out of the business, that's no like as cash. Okay, so that's being listed in the right hand side. That is under the credit column. Okay, so the first entry being the purchase. The purchase made here is first purchase made by cash transaction is on 7th of January. There is a cash purchase being done for 6,000. So that is being listed here. Then again on 18th, we have paid Ram, like cash, the sum of 2,500. Again on 30th, the cash has gone out of the business through rent and salary. So that is being listed here. So if you know like sum up both, so there would be a it would be balanced that whatever it would be balanced. So then again you're taking to the remaining thing, that is the carried down balance, you're taking here to the next accounting transaction or next accounting entry. And next we have is, so capital is done, cash is done. Then we are switching on to the Ram's account. So here, Ram account, we have a separate column. So whatever we are whatever transactions has been done with Ram, whether it is cash or credit, whatever it is. So everything comes under this column. Whatever the transaction, the business being done with Mr. Ram, so that would be listed here. So where do we find Ram? On 5th of January. So the first thing being done is there is a credit sales done to Ram from the business. Okay, so to sales 5,000 rupees, that's a credit sales. And then we have paid as a cash to Ram on 18th. So we have paid as a cash. So if you add up, that's 7,500. And again, if you switch on to the other entry, there is no other. I mean, from Ram, we haven't received anything in cash. We have only the cash has only been gone out of the business, but we have not received anything from Ram as of now. So in that case, just make the balance carried down here and balance the account. So this is how it would be done. If there is no entry to be done for the credit column, so don't worry, you can have the credit column in the debitor account, debit column itself, and then here you can adjust with the by giving the balance carried down entry. So give the same amount and take it to the next entry level. So now cash is done, capital is done, Ram is done. Now we are moving to sales account. So sales, then we have sales, then we have purchases, and then we have what else we have is Guru, and then salaries and rent. Okay, so we will move on. Okay, next is the sales account column, the next ledger posting. Okay, so here, if you see the sales, whatever sales we have done here. So we have done to Ram, 5,000 worth goods has been sold. And again, there is a cash sales for 4,000. And again, there is again a sales, credit sales to Mr. Guru for 2,000. And where else? Nothing. Okay, so 3 transactions. So 3 sale transactions has been done. 2 of being credit sales and 1 being the cash sales. So if you add up all the 3, it would be 5,000 plus 4,000 plus 2,000. So totally it comes to 11,000. Okay. So in the debtor column, so 11,000. And here in the credit column, you can define. So what kind of sales is being done. So since it is to Ram, it is a credit sales. You cannot mention here as a cash, or you cannot mention as a credit. So instead you have to mention the individual name or the business account name. So by Ram 5,000, and then by cash 4,000, and by Guru 3,000. If you add up the total here, again 11,000, it's being balanced. Then again carry forward that bring down that balance account. And then we have the purchase. So here is the purchase. Yeah. So whatever purchase we have done. So on 7th, there is a purchase. And then where else? Okay, just one thing, just only one transaction, purchase, right? Okay, so on 7th of January, there is a cash purchase done. So just one entry. So worth of 6,000 rupees worth of goods is being purchased by paying hot cash. So that is being entered here. Since there is no other entry for the credit column, as I said earlier, take the balance carried down entry here and balance the transaction, balance the entry. Again, then we are going to, so now everything is done. Now we are going to Mr. Guru's account. Okay. So with Guru, what kind of transaction the businesses have? So his Guru is coming on, yes, here. So on, yeah, here, sorry, Guru. Okay. So we have made a sales to Guru, that is on credit. Guru has not yet paid for us. So goods worth 2,000, it's being sold to Guru. So that is being entered here, 2,000 worth goods being sold. And again, there is cash received from Guru, 1,500. So that's being entered here. Okay. So if you see, there is a difference. So here 2,000 worth goods is being sold on credit, but here the cash, only what the business has received is only 1,500 and still 500 is pending. So in that case, to balance the account, what you have to do, balance the entry, what you have to do is adjust the balance by writing out or writing off by balance carried down and added. It means, so 500 is still pending with Guru. So Guru is obliged to pay to the business 500 rupees more. Okay. And then we have salaries account. So for salaries, we have a separate column. So that is done on January 30th. Yes, to cash account 2,000. And then there is no entry here. We are again balancing here. And then for rent account, we have another separate column. And since there is no entry, particular entry for credit column, again we are balancing it by writing by balance carried down. So everything, whatever is pending. So like you'll see, Guru is supposed to pay us another 500. So this one and what else? Yeah, here 1,000 rupees. And if you see the previous one, they have done sales. Yeah, credit sales is being done. So everything is now being carried down to the next accounting period, that is on 1st of February. So is it clear?
Yeah, ma'am. Yes, ma'am.
Yeah, almost clear. Okay, fine. So now, I want you guys to take some time, if possible, have a pen and a paper or a notebook. So there is exercise number 2 here. Journalize the following. If possible, you can write down the transactions, write down the journal entries, or what you can do is just by seeing the entries listed here, the transactions listed here, you can just say how the entry would be posted in the journal.
Salary?
No, I want you people, any of them can volunteer by giving the exact journal entry for the following. So you're seeing this slide, right? So there is a second exercise here. The first exercise is being already solved. The answers have been displayed. So I want now any of you to, if possible you can have a pen and a paper or a notebook and a pen, and you can work out on journalizing this for these transactions. The second one, you can take 2 or 3 minutes time. So just go through all the transactions, write it down quickly, and share it with me. You can just say it to me, that's fine. So I can wait for say 2 minutes, 2 or 3 minutes. I think that would be enough.
Ma'am, the first one, Cash
Yeah.
account debit to capital account.
Very good. Okay.
And second one, bank account debit to cash account.
Very good. Yeah.
And third, drawings account debit to bank account.
Very good. Yeah.
Fourth one, drawings account debit to purchase account.
Purchase account. Excellent. Yeah.
Fifth one, salary account debit to bank account.
Excellent. Excellent. Okay.
And the last transaction will be typewriter account debit to cash account.
Yeah. Good. Excellent. So it's so simple, right? So all you have to know, like understand is the nature of the transaction. Okay. So nature of this transaction and know see everything know from business point of view. So quickly you can know like work it out. Is it clear?
Yes, ma'am.
Yep. Okay, fine. So since we have now worked out one long illustration, no, such a like not too big, but okay, fine. Somehow, no, an elaborative illustration of no, like how to make a journal entry, and from journal entry, how to know make it no, like make ledger posting. So in this illustration, if you have any doubt, no, like you can ask me now. First check on the entries in the journal. Okay, so here is the example and here is the journal entry. First, no, like please check on the cross check the entries, check whether everything is fine, right? And then no, like I can change the slides. So if you find no, like if you have any doubts, no, like you can no, clear it as like immediately. Yeah, okay. I'm going to change the slide. I'm going to go to the ledger posting. Okay. The first ledger posting would be for the capital account. I'm going to like stay in this page for no like 30 seconds or something like that. And then I'll be no like moving on to the second slide. Next slide. Okay. So next would be, yeah, the cash account and the RAMS account. Okay. I'm going to change the slide. So now the ledger posting is for sales account and purchase account. Yep. And finally for Mr. Guru's account, salaries and rent account. Yeah. Is this fine? All clear? Okay, fine. So what I'll do is I'll send one more exercise while sharing the PPT with you. So one or two more exercises if possible. So you can work it out on from from your side. So you would be somewhat okay with the ledger posting as well. So please work it out. Please work out the examples. Please work out the exercises what I'm giving. Or if you have any reference book in from your side, whatever your university has provided, or whatever the PDF format, whatever you have received the textbook in whichever format you have received. So if you have examples there, if you have exercises in that book, please work it out and keep practicing it. Okay, so as I said earlier, brushing up just before the exam, it's definitely not going to work for accounts. Okay, so start now, from now itself. So keep working on 2 or 3 exercises per week. So now we are almost clear about the journal entries. So I'll be posting, giving you 2 or 3 more illustrations, examples for ledger posting. So work it that also. And the next week, forthcoming session, the next session, we will see the answers. We can now cross check with the answers. So after now cross checking the answers, we will be seeing about the how to make entries in the other subsidiary books. That is you remember we were discussing about the subsidiary books, like a purchases book, sales book, purchase returns, sales returns, cash book. Yeah, do you remember? I was I think in my second session, accounts test session, I was not discussing with you. So there are separate entries to you have to make in these different subsidiary books. So we will be seeing on that. So that will be our next session's title. And then we will be preparing the trial balance. You will work on how to prepare the trial balance from the ledger posting, from the other subsidiary books as well. Clear? Yeah?
Yes, ma'am. Clear on.
Okay, fine. So if you have any doubts, you can stay, you can ask me, or we can meet by next week.
Ma'am, I do a doubt regarding the exercise last week. You have shared 3 exercises, right?
Yeah,
In
3
that,
exercises. Yeah.
in that third exercise, in that one transaction, I have a doubt. That is, it is given that June 21st, withdraw from bank for private use and withdraw from bank for personal use. So how will be the journal it be given there?
Both are one and the same actually. So private use and personal use, it can be considered as one and the same.
One, it is given like we can write drawings account debit to bank, or we have to do drawings account debit to bank. 2 times we have to be written drawings, or 1 time.
Okay, let me take that exercise 1 second. So the third exercise you're discussing about, right?
Yes, ma'am.
Okay, the third one. Okay, fine. Yeah, I got it. So withdrew from bank for private use, 1,000 rupees, and withdrew from bank for personal use, 5,000. So both are one and the same. So it can be made as a single transaction, because it's not done on the same date. So same date, and cash has been withdrawn. Private use and personal use they both represent the same. The meaning is the same. Yeah.
So we
So
can
you can
add up.
add up both 5,000 plus 5,000, so 6,000. You can make it as one single entry, not a problem.
Okay.
Yeah.
Thank you, ma'am.
So any other doubts? Okay. So in the meantime, I will share the answers for the other 2 exercises as well, which I have given last week. What she was discussing right now. So the answers for the other 2 exercises, and as well as I'll be giving 2 more exercises for ledger posting. Okay, please work it out, and we will discuss it by next week. Okay, so bye and take care. Have a great weekend.
You too, ma'am. Thank you. Have a great evening.